Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Wednesday, April 23rd, 2025. It's 9:30 on the button. I usually don't do the videos right when the market opens. I figured I would, only because we're at that key level. Just got off my telehealth call that started late, so I got to post out to you while I was waiting on crude oil. I'll get to that in a second. But here we are, and this is why I want to start it out. And let me just start out with a reply I just made, and we'll for whatever it's worth. Hold on one second here. Okay, to kind of give you my thoughts, and this is a great question, guys. By the way, I appreciate all questions are good questions. Please keep them coming. So somebody asked, "Good morning, right side of the chart. Thanks for the post. It seems as though a tariff breakthrough is imminent. I agree with your TA in this post, and we'll be taking a short day trade. However, a deal with China will probably cause a rip your face off rally. Are you concerned about this, or not so much because of stops and trading futures instead of stocks? Well, the market's open now, and even if the market's open, so you can have stops on regular ETFs and stocks and all that stuff. No problem with stop loss orders instead of stop limit. Like I said, the big risk on those stop limits is they can get gapped beyond, and makes it a little harder to exit or control your risk on individual stocks and ETFs. So I'm going to just read my reply here because it summarizes my thoughts. No, I trade the charts and have stated quite often and recently that the news, including positive headlines from the president and or the White House on tariffs, was and is to be 100% expected and anticipated. Again, I made it clear I'm no expert. I'm not an economist, but I've done this long enough, and I've been adamant on that. You're going to get these positive little relief rally, little hint of news, and they're to be expected. And again, let me go on. Let's continue here. So regarding the rip your face off rally, yeah, that's a couple weeks ago. That's what I was talking about, the potential for a rip your face off rally. With any good news, I said, look, we're at the level where things are going to break. We positioned for it. Milked it to the button. You had the targets. We hit the maximum bounce target. Reverse went short and that was the single biggest day in nearly a quarter century in the Nasdaq, and that's what we were, my main trading proxy. So yeah, that was a rip your face off rally. Now, can we get another one? So that's not to say we can't have a second rip your face, face rip and rally. But here's a question: how much right now? We're at the downtrend line, the target that I gave you the other day. How much of that 7% rally, which is what it was on Monday's video, we were at the uptrend line on the triangle. I'm going to get to that in a second. And we just hit the target. I had two arrows going up to exactly where we are right now. That's exactly roughly 7%, almost exactly. How much of that is already priced in to what's been announced? Again, the technicals first. News, there'll be catalysts that often align with breakouts and moves in the market. So bottom line is, as per yesterday's video, there's a textbook symmetrical triangle pattern on the NASDAQ 100 on NQ and QQQ, which prices have just rallied into the top of. Should the NDX clearly go on to make a solid and sustained breakout above it, in other words, a breakout that doesn't fail, or just a little punch through with a little momentum, that would certainly be a bullish technical event that would portend more upside in the NASDAQ 100. Likely back up to or inside of that bounce target zone that I've been highlighting on the QQQ daily charts for the past that should be weeks. As of now, and as I often say, guys, resistance is resistance unless broken, right? That's one of my favorite sayings. Resistance is resistance unless broken. And so right now, as I type, and I just posted this right before I started the video, the NDX is trading at significant downtrend line resistance while overbought on the near-term timeframes. Near-term meaning intraday charts, thereby increasing the odds of at least a tradable pullback off this level. At least because I said this morning in the post that I got out to you, hopefully some of you caught it. A lot of times I put a little side note at the bottom of the post. And then that doesn't, get picked up. Last week I had to leave leave in the morning for an appointment. And I mentioned it there in the post. I must have had like 4 replies. Hey, where are you? What's going on in the market? So here, what I'm talking about right here underneath. So I said I would add, in addition to being objective short into reversal for active traders that game this recent bounce, This is also an objective level for longer-term swing and trend traders that recently booked profits or reduced short positions to begin scaling back into a long-term swing or trend short position on NQ, QQQ, PSQ, etc. As would be any continued rally into that bounce target zone that I've been recently highlighting on QQQ. So this is it, guys, in a nutshell. This is the downtrend line. I covered it yesterday quite a bit and been highlighting this since Monday all week. This is again a textbook symmetrical triangle pattern. Sure, if it breaks out, as I said, if it's anything but a fail, of course, a failed breakout's a failed breakout, and you can take the breakout on faith. But we're extended short term, as I talked about yesterday. This is a 60-minute chart. You go down to the 5s, 15s, we're even more overbought. So again, I put high odds and I go hard. When I, in the post this morning, if you read that post, I used the word, and it's the same word I used on August 5th at the lows last year, which was one of the best long opportunities in a long time. We came in heavy short that time. We were short the market, pretty heavy short, what it was. And the pre-market, I posted a hard reversal, and that's when everything bottomed, and it was an explosive rally from there. Hard reversal means close out all shorts, go hard long, full long. That's me, and that doesn't have to be you. I'm sorry, in this case, it's the opposite. Closing longs, because we're going up into trend line, and going into short. And a hard long means, as that implies, aggressive versus just kind of easing into. So I don't want to beat a dead horse. That's it. But I try to emphasize when the opportunities are there. And I think this is a good one. And it either works or doesn't. And the thing about it, let me add one more thing here. Here's the downtrend line on QQQ, by the way. It's not just, I know I always often post the futures. There's your downtrend line on QQQ. And again, we can pop it. If we pop it, we go higher. That's it. Especially if it, is anything but a failed breakout. You go back to the 60-minute chart, you can see it here. It's starting to pop right now. They're buying this open. And let's see how the day unfolds. This is what I call a momentum-fueled overshoot. You have a lot of velocity coming up into this trend line. Again, I just showed it to you on my preferred, trading proxy, the NQs. And I make up a lot of terms in trading, and one of those is a momentum-fueled overshoot. When you have a lot of velocity or momentum going into a resistance level, or down into a support level, it is more than common you will overshoot the actual support level that would have held if you had a more orderly drop to it, and still does hold. You just snap through it. And again, I use that analogy. Fastball, pitcher throws a 90-mile-plus fastball, hits the catcher's glove. If you had a slow-mo video on there, you're going to see it doesn't stop. The ball doesn't stop hard there. The catcher's wrist is going to snap back and then spring back forward. That's the same kind of thing. So perfectly normal to overshoot, and you also have a very nice resistance level, a couple nice resistance levels above. And now let's talk bigger picture, what I just talked about, QQQ. Again, I've been talking about this bounce target zone. We've already hit it, the bottom of it twice. We may certainly hit it again. We could go into it, and I've been saying this for the last few days. Would not surprise me in the least, not what I favor, but we could certainly do that. Nothing changes in my longer term outlook. This is, and I've told you, this is whole fuzzy thing here. I told you kind of went into active trading mode, kind of warned you of it, that we would probably see some back and forth grinding for a while, just how overbought we were with the news flow. Again, my gut feel experience on everything that's happened, my third targets being hit on both QQQ and SPY, and then having the expected and typical reactions off those targets. These are on the weekly charts. So it's all right now playing out exactly as I expected. And I talked again about this week and last week, what I call mean reversion trades. Volatility has subsided. It's still very high. The VIX is still high, but the mean reversion trades, I just said it the other day, I told you it's not a hard number, about 3%. 3% up, 3% down, give or take. Again, not a hard number. You can have 5% intraday swings, things like that. Still, VIX is still, let me show you. But that's when you get those 3-ish% rallies into resistance. There's the VIX via VIXY, the proxy that we traded. We hit T1, we pulled back. At that time, I gave you a buyback point. Said, there's a good chance it would have a reaction on my first target. And then I laid out that purple box before we even got there, saying that was your buyback, scale back in zone for any swing traders that took profit on T1. We hit the bottom of my zone. We had this beautiful rally right back up to hit my second target. Once again, I gave you a buyback zone, just like on the QQQ, and it's a wider zone, just like my QQQ zone. It shows my level of not as much certainty. I was more precise with my certainty before. That was that biggest, 1-day drop, 1-day gain in the NASDAQ 100 that we milked, from the lows to the highs, got in front of before it was announced. And that was that drop that got us back in. Right now, yeah, I could see us break out of the triangle pattern. I wouldn't be surprised in the least. Like I said, I think the odds favor at least a pullback. But if we break out above it, then this is it, and it's a pretty wide zone. How do you trade it? You don't. If you agree with it, you start scaling in there. You take a starter position. You can add more. And at the bottom of it, assuming everything looks good, and you can see I just put a trend line here. You'll have an uptrend line as well that may come into play. That's where you would be at a full position, but not adding to VIXY anymore if that level breaks. Same thing on QQQ in reverse, and that's what it is. The VIX is basically the stock market in reverse. I know I've said it before. This just bears repeating for new folks. I know that the VIX tracks the S&P 500. There is a NASDAQ volatility index, but the VIX is much more liquid. It's my preferred proxy. The S&P and the NASDAQ go up and down together. The NASDAQ just tends to go up and down more in percentage terms. And so that's it. So this meshes with roughly or pretty closely the bounce target zone or the pullback zone in VIXY. Now, you might say, well, Randy, I'm just going to wait till we get here. And we may get there. And we could get there and do this. But let's just say that we get there and go down, and that's your plan to wait for that. Well, we've already hit the minute bottom of my bounce target zone before, and I've traded markets like this before, and I believe, and I may be proven wrong, that we're in an early stage of a bear market. And I've said this before. I never trust a bear market rally. They're going to feel good. Most of the retail crowd, they chase them. They didn't want to buy on Monday when I highlighted in the video that was an objective long entry at the uptrend line. We've now bounced 7%. The average annual return for the stock market, not adjusted for inflation, is exactly 7%. We've made in 2 days what for 100 years, if you go back for 100 years, I just did a quick Google search to verify it, 7% is the non-inflation adjusted average return for the stock market for the last 100 years. And if you make 7% in 2 days, you don't have to adjust it for inflation. There's no measurable inflation over a 2-day period. That's an annual thing that they factor in. So, you just match the return in 2 days of the stock market. You could stop trading and beat or match the average return for the market right now. Again, I'm just trying to put in perspective. And this is what we do here. If you're a long-term investor and you have a 30-year horizon, this isn't for you, listen to Warren Buffett. Listen to the late, great John Bogle, founder of Vanguard. Put all your money in an index fund if you've got a 30-year time horizon, and you should be fine. But that's not what we're here for. We're here to outperform the market. I wouldn't be doing this if I couldn't outperform the market. I would just resign to myself to put my money in an S&P 500 index fund. But I want to vastly outperform the market. That's what we do here by gaming a little back and forth. So anywho, I think I've made my views pretty clear, and I'll watch and I'll react accordingly. And the other thing, guys, when I go back to this, if you have no position, if you came into the day flat, this is a phenomenal RR right here. There's a little minor uptrend line. To short here at the trend line for a pullback trade, I gave you the targets that were drawn out today on that post I gave you this morning. You have a gap right here. I hand drew it in, so it didn't have the level. You can see the gap right there, the top, the bottom, and then this level here. So somewhere in there at minimum, quite possibly down here. But I also spoke to longer term traders and investors, because remember, we've already had 2 opportunities. And from my experience, bear markets are very, very mean. They're very cruel to longs, to bulls, to the masses who are full of hopium, bury their heads in the sand during drops. And so what it did, it gave 2 opportunities. And if you blinked, you missed it. We nailed that. We exited there. Reverse for a pullback. There was another bounce, another opportunity to exit. We may get it again. We may blast on through there. We could go to new highs. I could sit here and tell you all day long all the possibilities. It's infinite number of possibilities. I speak only in probabilities. So my probability is that the bounce ends anywhere from here, and we've already had 2 opportunities to short there for long-term positions or active traders, just because it's resistance. And if we get up in here, and here's the thing we should know today: this thing, breaks out. If we break above the, again, you can view it on different time frames. I'm looking at that. The futures I just showed you, we're still there. Here's SPY. This is the S&P 500. Here's my downtrend line. I'm going to tweak it here a little bit. It should come in a little tighter here, catch that high, and it was just drawn a little loose. There it is, something like this. So let me make it big and fat so you can see it. Or here, you know what? We'll do this. Turn everything off. Let's just hand draw it, right? Here's the highs in the S&P 500. Catch those candles. There we are. We've got a little more. If you zoom in real close, you can see we have a little more upside. I can draw it on this board. Here's a clean board, cleanish, meaning there's no lines up here. So roughly there. Now, could be there. Here's the thing. Do you want to try to milk out that last? And then look, you can see price resistance right here as well. Why is that price resistance? That was a major reaction low, clear. This is a textbook breakdown candle. Support, SPY was bouncing. They were applying pullbacks to that level. Big red gap down, and the bottom fell out of the market. Just collapsed the bids, blew out all the stops, and kept going. Rallied back to it. Where did we exit the day of that biggest rally in 25 years? Right there. And again, so that is an additional confirming reaction. So here we are. So I'm going to quantify it for you. So yeah, we could rally a little more. Maybe NQ breaks a trend line. If you followed me for a while, you've heard me say this 100,000s of times over the years, depending on how long you followed me. I watched the S&P 500. I watched SPY. I watched ES. I watch other indexes. I watch all the major stocks. So sometime, and I do that even if I'm not trading it, even if I'm trading the NASDAQ or the small caps. Why? Because the NASDAQ may break out of the downtrend line that I just showed you, start out with, but yet at the same time, the S&P 500 is coming here. There is a ginormous subset of traders. Some folks, like me, prefer trading the NASDAQ. Others prefer trading the SPY. It's very liquid. It's been around forever. They'll trade ES futures, SPY. And so those folks are watching here. So where the NASDAQ breaks out, those QQQ and NQ traders might be buying that breakout, not realizing at the same very time there's a lot of SPY traders that went long the other day also and are looking to sell. And that's where they're going to sell this rally into resistance, which is, if I zoom in real tight, there, 0.71%. So is it worth it trying to milk 0.7% after we've already made, at least in QQQ, it was 7. I measured it this morning. In SPY, we're up off the, 7 also. 7%, 7.2%. I don't think that's worth it. So there it is. And those are the levels to watch. Replicate that downtrend line. Use log scaling. Very easy to do. Anything much above that, you still have a lot of overhead resistance. You have the 200-day exponential, the 200 simple. Those are key moving averages that often cap bear market rallies. So the risk reward is not very attractive. That doesn't mean we can't go up there. It just means there's a lot of resistance, and any one of those levels could be met with a lot of selling. So that's it. Let me cover the other things right now for you. What else do I have for you? Gave you crude this morning. There's that. Let me update this one. Sometimes these charts won't update. There's the breakdown. It was highlighted. There's an objective short at the resistance with an alternative or secondary add-on on a break of the trend line, which we got today. So that's an active short. Well, it was active yesterday. There's the other things out there too. I'm just checking this because I had a price alert right after the open. This is a trade I threw out for you, along with the other ag input stocks, the fertilizer stocks. We already hit fourth target. We're there again. We already hit it once and had an expected pullback, so we could break out. So that sector I'm watching and still liking. The ag input stocks, a lot of those are profitable, hit multiple targets. What else do I have for you? What else? That little, low, high risk, high return potential Verve continues to run up. We had the pullback there. moving nice today. The crypto ones, remember, crypto's at resistance. I probably should update that, but let me just give you, what was it? I threw out the official one, not Coinbase. God, I own it. Riot, right here. Riot has now broken above T1. And we'll see IBIT. We can look at GBTC, Bitcoin, first to market ETF. Again, Bitcoin is testing the bottom of this trading range here. So if the market reverses, even though Bitcoin has run the other way, it's been one of my best positions lately, because on just about every day it's been up, whether or not, like I said yesterday, whether I got in early to NQ longs or shorts or whatever else I was trading, Bitcoin's been nothing but almost a steady up, but it's at pretty significant resistance, as I showed you yesterday, and still where it was right about in the video. The futures rolled. I had to re-replicate my charts this morning because we rolled contracts. This platform won't show me. The other one's still more liquid, but now they're showing this platform's gone to the maze. That was that we had. This is the main support level. We had a couple spikes below it, so I had that line there. We're right there at resistance, and I'm going to bet and I'm short crypto right now. I've been long most of the run up from the bottom, but I'm betting we'll get a reversal in the market most likely, and then also in Bitcoin it'll kind of revert back to a risk on asset. And again, profit taken. I mean, come on, if again, that whole bulls make money, bears make money, pigs get slaughtered thing, 27% gain. I know Bitcoin can do that and then do it again and then do it one more time. It tends to do that, but all I can tell you guys, again, I'm giving you my thoughts. Where we might go, what may happen. But when I tell you things definitively, we're at resistance there. NQ is at resistance. Crude just broke down. What else can I tell you? Those are facts. Those are not opinions. They're pretty clear levels. I show you how I come up with the levels. Why the resistance, and then give you why my expectation is. And that's the one thing about it. It's one thing to just give you levels. I could sit here all day long and give you charts with support and resistance levels and then say nothing. And then, okay, well, what do I do with that? I will give you my 2 cents, whether we're going to break above it. In other words, when you see a downtrend line, you have to decide. You have to pick a team. Are you a bull or a bear? Are you going to wait for a breakout above it and go long, or sit tight on your long expecting a breakout above it? Or are you a bear? In a bear market, you want to take advantage of rallies into resistance, then short. So that's the difference. And I always say you got to pick a team. It makes me sick when I hear the people say, oh, just trade the charts, trade what's in front of you. Yeah, well, they're like those Rorschach ink blot tests. We all see different things. You look at a chart, somebody sees a bullish chart, somebody sees a bearish chart. You have to take a team, pick a side, I mean. And so that's it. So let's see, what else do I have for you? Let me just wrap up. One of my favorites, still very much expecting a significant move in the in gold and the miners and silver. The dollar, as I covered yesterday, broke out, bullish falling wedge. It's a 60-minute chart. There's a breakout. I gave you these targets. We hit the first target. I always say the reason I list multiple targets and levels, each one upon the initial level, I expect a reaction upon the initial tag. And I always, again, if you followed me for a while, you've heard me say this. A reaction can come in two ways. When you're going up and you hit a level, reaction can be a reversal there, like a pullback before the next leg up, or a reaction in time. So in time or price, or a combination thereof. The analogy I've always used is you drop two things from onto a concrete floor. You drop a hacky sack and you drop a golf ball. The hacky sack is going to go here and stop. The golf ball is going to bounce like this. So that is a reaction so far, and it's the more bullish of the two. It's a reaction in time. We're reacting on that level. We stopped, hit it cold. And my expectation, once we start to move up, we'll go to the next target. And the higher we go, if I'm right on this call for a reversal in the dollar, been harping on it for the last few days here, showing you at major long-term support. If I'm right on that, you're going to see a what I believe to be a crowded rush for the exits in gold and everything associated, which is gold, silver, and the mining stocks. There's gold. Yesterday, I mentioned in the one of the comment sections, or might have been the video. Definitely, if it wasn't that, it was in the comment section that we were poised to close below that, giving me that long-awaited, sell signal in gold. And we did. We closed below the trend line. I didn't have to squint to see it. And then, boom, look what happened today. Biggest drop in a while. And these are a lot of trapped rats right now trying to get off a sinking ship. I told you there's just thin air, all these gaps. And this is what you see in a crowded rush for an exit. So the miners got a lot of downside. You get more bang for your buck, in my opinion. Trading gold, it's too... I always say this. It's like the same logic I have for trading the NASDAQ 100 instead of the S&P. I'm going to be right or wrong on my stock market calls. Why not get paid for it? The NASDAQ typically goes up and down more than the S&P in the same direction. Same thing with GDX and silver. They follow gold, but they move up and down more. So you're either going to be right or wrong. What it allows you to do too, you can beta adjust your position size accordingly. You just need to put less money in GDX to make the same dollar gains and losses trading silver. And so there it is. GDX is down today 4%. And gave you targets recently, coming up on T1 there. There's a gap here. You could just, I should note this, we may reverse a little shy. They'll probably come in and buy that, backfill the gap, but I'll still maintain these targets for now. And I still think we're coming down to that trend line, especially if the breakout in the dollar gets built upon, because sometimes I see things, I tend to see them before they happen and before the masses realize. So it takes the masses, tend to be a little slower from my experience. And so before they realize, hey, the dollar is in a new uptrend, and that's bearish for gold. Again, there's the, where was it? Weekly chart right here. There's the reversal. I told you we came in, we had that previous reaction low, we tripped below this level, and I said it would be bullish, and I expect to see reversal back into the purple zone. And the more we get into there, you're going to see that rut row moment for dollar bears that were what I call JCL shorts, Johnny come lately. They didn't want to short the dollar here or here, or on the breakdown of that uptrend line. They wanted to start shorting here because they figured the dollar was going to drop forever because now Trump has started a trade war that he's never going to back off of. And again, I told you there will be, in the Powell thing, I think Trump got dragged into the room with the Illuminati yesterday because he cowed down, and he's a man of ego, big tough guy, and doesn't back down. He retracted. I saw in the headlines, oh no, I'm not going to fire Powell. I mean, come on. Has he not been saying that? And also on the trade wars, so all this stuff is dripping out. I really think somebody marched that man into a secret room in the bowels of the White House, down where those tunnels are, and said, this is what you need to do. You need to shut your mouth about Powell, apologize, and do something else. And so because this is catastrophic for the U.S. if the dollar were to break this level, just like I said back a few weeks ago when the financials were pushing the red line and the stock market of levels that if we continued much lower, something would break in the financial system. So right on cue, they stepped in and rallied the banks, rallied everything, and this is typical bear market action. Typical. There's a downtrend, make no mistake about it. There's no evidence of a reversal. You have downtrend lines we're shorting back to, and this is the most likely path. If something else happens and we start taking out previous reaction highs, again, that's the definition of a downtrend, series of lower highs and lower lows. This is when it starts to be called into question. When you start popping the previous highs, then you may be looking at new highs in the stock market. We'll see. Okay, let's keep this one relatively brief. I've got it under 30 minutes. I'll get it out to you. As always, you can just take the little slider bar at the bottom of the videos and skip forward if you want, see what charts are being covered. You can also play these videos in fast forward speed. But that's it. Those are the big things I'm watching and what I think will happen. So like I said, even if you're not confident, but you've been in the Bitcoin trade, you've been in the NASDAQ for the last couple days, You take profits here, wait, see what happens. You know my thoughts, what's going to happen, how I'm trading it, but and I've also spoken to, which I always try to do, long-term and short-term investors. Short-term investors shouldn't get too overly concerned with the short-term charts. I made clear today. Also, I kept talking about the charts I was posting the Nasdaq as being a last couple of days 15-minute chart. I was showing you the hourly chart. It's always up there in the. It doesn't matter really. It's just the lines are the same whether you draw it on the 15 or the 60, the downtrend lines, and that's it. So we popped that level. It's actually even better if we pop it and reverse it. That's the most bearish thing, because when you pop that, everyone starts buying, shorts start getting squeezed out. Their stops are too close. I always try to put my stops out of range, especially on what looks like a momentum field overshoot. And the only thing more bearish than a hard reversal at the trend line is a brief breakout to clear out what I call weak-handed shorts and then suck in some new weak-handed longs. Why did I say that? I'm not trying to be offensive, guys. What I mean by that is the longs that buy the breakout here that think it's legit, and it may prove to be, but if not, their stops are going to be on the other side of that, because if the breakout fails, then they have to recognize, or at least they should, I just bought a breakout. The breakout failed. I need to throw away, muck my hand, throw it away, and accept my losses that I'm wrong, because fewer things in trading are more bearish than a failed breakout. And that could send us all the way back down to and possibly below the bottom of the triangle. And this is the way I'm leaning. If you want to know what I think is the most likely scenario, and if we go a little higher, you have my bounce target zones, and then I'll continue on my longer term accounts to deploy more and more capital, short positions, and close out any remaining longs there. I'm talking trading account. I did the hard reversal, and investment accounts or long-term accounts, so I don't trade as actively. So there's my trading plan. There's what I'm watching, and I'm going to continue to hunt for new trade ideas, see if I can find some new stuff for you. This has been Randy Finney with Right Side of the Chart. Have a great day.